And we do have breaking news, a look at the markets just minutes after the opening bell this morning as Wall Street reacts to President Trump's new tariffs. You can see the giant red arrow pointing down.
The American markets are absolutely crashing right now. Is this the end for the American economy, or are we going to see this potentially rebound in the next couple of weeks? In this video, we're going to be trying to figure out exactly this. We're going to be looking at a lot of key metrics, and we're going to be looking at what could potentially perform next week. I hope you do enjoy this video, and if you do, please do hit a like and subscribe. With that being said, let's get straight into it. So to start this off without wasting any of your time, here you can see I have conducted an intrinsic valuation for the S&P. Now, it is obviously very important to state this is kind of almost a speculative way of looking at this, because it's hard to really crunch these numbers for 500 stocks, of course. But here we can see Graham's formula has an earnings per share for the S&P currently at 75. Again, that is an estimate, a estimated growth rate, and I think this is quite a fair, if not a bullish growth rate. I don't think we are going to see 22% over the next year. That would be kind of outrageous. I think it'll be more around the 15%, and a AAA bond yield, current and average. And on the left here, the bullish chart is putting an intrinsic value for the S&P at only $3,465. And on the right here, on the bearish chart, we are getting this put at 1,914, with the current price of the S&P being at 5,000. This is obviously saying that the S&P is looking overvalued at this time. And when we go in between the two of them here on the mean, we can see that the intrinsic value is set at 2,689 and the acceptable buy price is set at 2,017. It's worth saying that this acceptable buy price includes a margin of safety of 25%. So what does this really tell us? Well, it does tell us the market does look overvalued, and this can be further backed up by Shiller's PE ratio, where here we are seeing very similar results to 2022, where we did actually see the 2022 crash. But as of recently, we are seeing this drop off quite significantly according to the Shiller's PE ratio, which could indicate that there is a lot of momentum falling behind the S&P right now, therefore putting a lot of selling pressure in, which could potentially mean that this is going to continue for quite some time as investors are actually panicking right now. Furthermore, with the Fear and Greed Index showing a result of 4 at the moment, this is the lowest I have personally ever seen this. And this could warrant a really good buying opportunity for long term, as right now the US markets are down massively. I mean, just look at this chart right now. This is absolutely ridiculous. According to TradingView, the S&P is down nearly approximately 17% right now. We have just seen a massive amount of selling pressure in this last day of trading. But again, this could be a really good buying opportunity for the American market. I mean, this is kind of unprecedented. This is absolutely ridiculous when you really do hone in and think about it. I mean, we haven't seen anything quite like this since 2022, but even that was nothing on what sort of volatility we're currently seeing with it falling down. There's such a significant amount. Of course, this is mostly being driven by the catalyst of Trump and his tariffs, but of course, that's going to hurt consumers in America short term, long term. Who actually knows? The plan is obviously it helps the American spenders, but obviously right now it's looking as if a lot of people are selling positions just out of pure fear and panic, which of course is not ideal for our positions. But if you've got cash on the side, this is looking absolutely amazing. So quickly taking a look at the indicators here, we can see we are, of course, on a short position on the MACD indicator, and on the moving average, we can see that, of course, we are below all of them quite significantly, and this is going to be the case for quite some time. Looking on this indicator here, we are definitely in a short position as well, and on the supports, we have actually passed through all of the supports now, indicating that it might be pretty much fucked at this point. I think I would probably put another support just down here at this level, but oh, there you go. But again, it's kind of difficult to say at this point. We're definitely in a very fearful market at the moment, and that could definitely continue into next week. So let's quickly look over some big US stocks, and obviously we have to start this off with NVDA. So NVDA is down quite a significant amount since its peak, with it now being down approximately nearly 40%. This stock is taking quite the brunt of this, and I do actually think NVIDIA at this point is a perfect buy-in opportunity. So I currently have NVIDIA's intrinsic value, and this was done way back in January, of course, so please do take this with a pinch of salt. But I have their intrinsic value on the bullish side to be set at $246 and on the bearish side of $129. Of course, this will probably need re-revising now the tariffs are in place, so and obviously that is going to affect NVIDIA's core business. So we can see here that this stock just looks massively cheap right now at $94. It's obviously got a lot of momentum going against it right now, so it could potentially be a bad time to buy in. But I do think if you're in it for the long run, as with all of these stocks, well, the majority of them, of course, it's going to be perfectly fine and it will actually yield very good results. Just very quickly, I would like to show you that based off of 62 analysts, NVIDIA is currently rated at a strong buy, with 45 putting them at a strong buy, 11 at a buy and only 6 at a hold, and no analysts are currently putting NVIDIA at a sell or strong sell, which is obviously incredibly bullish for NVIDIA and further backs up the point that this could be a perfect stock to be buying even at this rate, despite the fact that I think this will continue to decline. In the next 12 months, we can expect a price target set at a high of 220 and a low of 125. Now I'm going to take a look at Google, because this is probably most definitely my favorite stock at the moment to be looking at. Of course, this is also falling off massively, but from memory, their PE ratio is ridiculously low. It's below 20 now. Yeah, it's at 18.11, which just shows for a fact that Google is looking incredibly cheap, and this is just the best company in the world. They are very much future-proofed in every regard, and what they do just brings in so much profit, especially for saying how many employees they have. It's just an amazing company. But we can see here the next level of support for Google is way down at $130 odd, so it's looking to be as if they are probably going to end up reaching that, which I do want them to. Don't get me wrong, I have a very small position in Google at the moment, but I am just waiting for a better opportunity to buy in. Basically just waiting for all of this momentum to slow down and die off, because at the moment this is looking to be something that can continue for quite some time, especially as the current American administration is basically almost forcing people to sell out of pure panic. On the MACD indicator here, of course, we're in a short position, and on the moving averages, we are, that's not the moving average, on the moving average, we are, of course, below all of these as well. Furthermore, looking at the current recommendations on Google, we can see that the analysts are putting this at a general consensus of a buy, with a price target set at a high of 237 and a low of 164 for the next year. SOFI. Now, this is a stock in which pisses me off, because it should not be going down like this, but of course it is. And the thing is, right, I say it should not be going down like this, but it probably should at this point, because it's just not performing to the point in which we need it to. And when competitors like Robinhood are announcing similar products to them, it's kind of putting SOFI in a bad position. Don't get me wrong, this stock is still incredibly cheap, especially for the next 10 years of growth long term, and even 2 to 3 years short term. This stock looks incredible. It's such a good stock, but right now they kind of have it all going against them, especially with the collapse of the US economy. Obviously, at some point, the Fed is going to have to raise interest rates, which could definitely help SOFI. But at the same time, it depends on the current fear in the market. It will help them in terms of bringing in some more capital for the money in which they lend out. However, it will also hurt them in the fact that people won't want to take out loans. And I think that will affect SOFI more so than the actual interest rates helping them bring in capital. I do think it's not looking good for SOFI or any fintech stocks at this point, which is a bit of a shame, because I do really like SOFI and I have a very bullish intrinsic value on them. When I can find it's here. So for the height of SOFI, I have this set at $118, and this was done in February, so it does need to be re-revised. And on the low side, I have it set at 90, and the current price is set at below 10, which is super, super cheap. Of course, in the last couple of weeks, I think it was around about here-ish, but don't quote me on that, we have seen big players within SOFI's management team selling shares, but they sold like 5 to 10% of what they currently owed at that point of their shares. So they still obviously have a lot of hope for SOFI going forward, and I think the market in general does as well. Looking at the analysts' general consensus for SOFI, we can see here the general consensus is a hold based off of 19 analysts, and we can see a price target of a high of 20 and a low of only 5 over the next year. So that is very, very bearish for SOFI. So then Hims and Hers, this stock has been beaten down quite harshly since its peak here way back a couple of months ago. It is now down 65%, which is absolutely ridiculous. It is now below all of the moving averages, which of course is only helping to push this stock further down. And it has obviously fallen below the resistance here, and it is looking as if it might be set to fall down to its support now. However, despite this, Hims and Hers actually still have a price to earnings ratio of 49, which could suggest that this stock still looks relatively expensive. But I do think for long-term growth, this stock is looking incredibly cheap at this point. I was very bullish on it around here, so why would I not be here? I think it does deserve to actually climb back up from this point. It is looking incredibly cheap now. So long-term, potentially a great stock, but I do think short-term could yield some bad results for Hims and Hers. And from February, my intrinsic valuation calculations for Hims and Hers put a bullish side on $66, a bearish on $34, with the price currently being at $25. It's looking very cheap, admittedly, on that scale. And on a discounted free cash flow analysis, in 9 years' time, we should expect to see this stock at $315, in 3 years' time at $105, and for this year only at $35. But I say only, that is still profit. If we were to jump up to $35, where would that be? It would be around about here. So of course, intrinsically, this stock looks undervalued right now, despite the P ratio saying 50. So it could be a stock which does warrant a good buy, but I do think we are going to see this stock go goodbye. Probably the only stock that's actually going up right now is Celsius. A lot of you don't really care about Celsius, but I kind of have a love-hate relationship with this stock because long story short, I bought in, stop loss triggered, I sold out, it went up 50%, so sad days. But it's looking as if this stock should actually start to see a bit of selling pressure soon. It is starting to plateau a bit, but that could also mean that it's going to shoot up. I'm not going to tell you that all that candle looks like this, or because nobody really cares about that, and it's kind of a load of bollocks, especially on a day chart. But here we can see that they are in a long position, and well and truly in a long position on the MACD indicator, and on the moving average we can see that they are above all of them except from the 200-day moving average, which if they can push above that, I think it will add a bit more momentum. But we can see here that they did push above it, and it didn't seem to do too much. They did actually fall straight back down below it. I don't want to talk about that stock for too long because a lot of you seem to just end up skipping it anyway. So here we're going to look at AMD. This stock is just absolutely tanking it right now. Within the last couple of days, within this last week, they are down 24%. Obviously, that might not be a week. It might be more so like this. But even still, they're down around 20%, which is just absolutely ridiculous. But this stock is looking incredibly... I'm not going to lie and say it's looking cheap, because it's not. I still think this stock looks massively overvalued at this rate, and I think a lot of you are going to hate on me for that. Give me a minute whilst I find their valuation. Okay, I found it. So it is at a bullish side of $67 and a bearish side of $36. If you're wondering why these are always wrong, don't ask me, because I haven't fixed it yet. On a discounted free cash flow analysis, in 9 years' time, we can expect the stock to be at $294, 3 years, $98, and this year, $32, which is just barely off the bearish price there. And based off of that, this stock looks overvalued still. What do they say on a PE ratio? Well, currently they are at 85, so again, yeah, definitely looking overvalued. And this is a stock in which should potentially sell off quite heavily within this crash or correction, whatever you want to call it. It's hard to say. I can't say this is looking like a good buy. Even at this rate, I would want to see this at least fall down to the $60 mark. Obviously, it's a good stock for the long term. I'm not saying it's not. I think long term it will do perfectly fine, but there's definitely better options on the table, especially at this current rate. Super micro. So this stock is one in which I absolutely love because it just looks incredibly cheap always. But it's something in which obviously comes with a lot of volatility. It has a PE ratio currently at 12.9, which indicates that this stock looks massively undervalued, and they haven't actually seen too much selling pressure despite this recent crash. Obviously, they have seen a decline of 30%, so maybe I lied a bit there. That is quite a bit. And since their peak, they have now fallen down well over 57%. So it's definitely looking like they have taken quite a hit. But this stock just looks massively cheap. I was bullish on it here. I'm going to be bullish on it here. Obviously, right now, is a very different circumstance. Right here, we were saying like, well, to be fair, I was saying at this point that everything looked overvalued, and people were saying I was wrong. But hey ho, at the end of the day, the market did go down. Getting off track there. I think we're still going to see this continue to go down. I mean, we are now looking like we don't actually have a level of support, but we are looking like this stock is just going to continue to fall, especially when all of the moving averages are above, where the current price is. And on a MACD indicator, we are well and truly into a short position, which only opened up recently and is looking as if the momentum is just going to carry this straight down. So quickly looking at the NASDAQ, this is also looking as if it's just had a massive sell-off within the last day. It's just looking absolutely ridiculous at the moment. There's just so much fear within the market as a whole. This is just looking as if it warrants a perfect buying opportunity. Of course, we could say that there is a support level around about here, but I think with pure momentum, we're going to smash straight through this, and we could see quite a large correction within the American market at the moment. But of course, we've got to remember that Trump says that he wants to crash the economy. I don't know if he's actually specified why, but obviously, I think in my opinion, it's quite clear that it just looks massively overvalued as a whole right now, and that is just not sustainable. It just needs a quick correction, and then it can continue going sideways and up for a bit. It's a natural thing for those of you that are new to stock markets and American markets specifically. It is natural for stock markets to crash. It's what needs to happen for it to remain sustainable. You can't just keep pumping and pumping and pumping because, well, for a start, that's just never gonna work intrinsically, because people need to take profit, of course, and exit liquidity comes into this, where people are getting in and people are getting out, and global liquidity as well, but that just goes into a deep rabbit hole. But what I'm trying to say is this is extremely positive, even though a lot of people are panicking right now. And when Donald Trump says that he's trying to almost devalue the US dollar to help American spenders, it's obviously news like that and articles like that are just going to hurt markets quite significantly. So before this video goes on for about an hour, I'm going to end this video here. I hope it has been useful and you have enjoyed it. If it has, please do let me know in the comments and leave a like and subscribe. It would be greatly appreciated. I hope you have enjoyed. And with that being said, if you want to see more of this, I do this pretty much every week, and I'll see you for the next video.